Let's start with the Fed and Jay Powell.
Yeah.
He sort of said a message, we may have to keep the rates higher longer. What did you make of it? Where is the Fed headed, do you think? Where should it be headed, given what we're seeing in inflation right now?
To be honest with you, I don't know. And it's very obvious, neither do they. We're in this mess because the Fed didn't do their job over the last 3 years. I mean, when you think about we added, what, $7 trillion to our debt in 3 years? This is the Weimar Republic. And if the United States isn't careful, they're going to find themselves in the Weimar Republic.
Well, what about that point specifically? Because the Biden administration, their budget came out, and nobody believes that budget's actually going to get implemented, but it's at least directional where they think they're going. They were going up to something like 110% of GDP in debt, higher than what we had in World War II. They're adding like $17 trillion to the debt over time. At what point does this become not a problem, but a crisis for the United States?
When people don't want to buy our debt, when we're faced with the prospect of losing the U.S. dollar as a currency, as an international currency. And if we lose the U.S. dollar as a reserve currency, we're looking at 20 to 25% reduction in our standard of living. If that was included in the definition of the U.S. debt, maybe you'd get some attention. But the reality is that the Biden administration and Powell have gotten away with not doing anything other than continuing to inflate the bubble. And I think it's very, very dangerous.
Whatever else you think, it looks like we're coming close to the end of free money. We're basically pushing money into the system across the board. Certain Jay Powell is tightening the screws. You complained about free money. You thought it was a bad thing for investors.
Terrible thing.
If it's ending, what do you get to do? What does that allow Sam Zell to do that he didn't do before?
First of all, your assumption that it's ending is a little naive. I mean, we look at it in the real estate arena, where municipalities are, deferring the ability to foreclose or get people out of a house or get people out of an apartment. And every time the strategy leads to a decision, there's a deferral. And we'll wait another 3 months. We'll wait another 6 months. And so we're talking about ending free money, but we're not ending free money. And or we're ending it at a much slower pace than ought to be called for. So I'm not sure that the assumption that free money is over. And I think we've got some serious problems. I mean, we've got the classic problems that we've always had, which is if you keep feeding them free money, they get used to it. And then they say, well, where's my free money? And, look what's happened to the housing market. In a matter of, 60 days, the monthly payment has doubled. These are extraordinary times, and I'm not sure we have the leadership, either in Powell or Biden, to basically deal with that.
And as it gets tougher and tougher, for example, to borrow against real estate, you see a lot of pressure, not just in the housing market, but commercial real estate as well. I mean, we saw some big news this week with Brookfield and PIMCO and Blackstone essentially walking away, it looked to me, from big mortgages. What does that tell us? I mean, that's pretty remarkable.
Well, it's both pretty remarkable. It's pretty dangerous. The rule of law is based on everybody, quote unquote, being responsible for their obligations. If the biggest lender in the country, Blackstone, can walk away from their obligations, who else can? And and if I'm a little guy and I have a 2-flat, and the question is, what do I do? And I pick up the newspaper and I see Blackstone, Brookfield, and PIMCO are all walking away. Why should I feel bad about walking away?
So let's come back to equity group investments for a second. Given where we are right now, I know you only do something like 3 or 4 deals a year, something like that, right?
Yeah, depending on the year, but yeah.
Okay, is this year going to be different? I mean, given what you're seeing, is that creating opportunities for equity group investments?
It will eventually, not yet. The buyers and the sellers haven't agreed yet as to what the price is. The seller is still looking for the number that was on the table, 6 months ago when interest rates were 0. Now interest rates are 3 to 5, and he hasn't adjusted his price. The buyer, on the other hand, is looking at his cost of capital doubling, his availability of capital diminishing, and he's saying, wow, under these set of circumstances, I ought to get a much better deal than I previously got.
So, if I can put it that way, that's a form of correction. There's a correction in the marketplace where the buyer and the seller's expectations come into line.
Or it's a form of no correction.
Well, that was my question.
And
Is it in the process of correcting? How long will it take?
Well, I think that correction is the right word, but I think the correction is going to take a lot longer than everybody expects. I mean, there's a certain, mental set in America of, okay, we've finished this version, now let's start the next version. And there's never, ever an adjustment for what it takes to make that transition, to cross that bridge.
Sam, you've been an investor in energy and oil in the past. Where are you in that sector now? And specifically, given what we're seeing out of the federal government and others really changing the investment equation when it comes to renewables, is that more attractive now given the government's participation in things like the Inflation Reduction Act?
Boy, I'd like to think you're right. And I'd like to think that that's exactly what's happening. I don't think that's right. I don't think that's what's happening. I'm wondering when 2035 comes and you can't build any more, carbon cars in California, what are they going to do? I don't know. But I know for sure we're not going to complete the transition from carbon to non-carbon or to renewables. That just can't be done within this period of time. And I think that the question becomes, how much can society sustain? It's how much change can we actually pay for? How far can we go and say, okay, we're going to, move to, renewables? Well, I'm in favor of mom and apple pie and renewables and, all those wonderful things. But the reality is, first and foremost, I got to decide what's feasible. And I think that 90% of what's being done is infeasible.
So, Sam, let's put you in charge of the economy. You can have the White House and the Fed all put together. What would you do to address the debt problem, the deficit problem, the growth problem? What is the thing you would do that we're not doing now?
Accepting reality. Accepting the fact that, we've got a major transition that's going to have to happen. We can't sustain a carbon controlled economy for obvious reasons. So we have to say, okay, how do we get from here to there? And the way to get from here to there is not spending money or following Obama's ideas of dropping piles of money, on things that don't make sense. So I think we got to slow down the process. We got to face up to the reality. We got to say, this is going to take 25, 30 years. We can have the best of intentions. And I really believe we can have the best of intentions. But it still requires time and effort and commitment. And like everything else, we're always looking for quick, simple answers.